What's up, guys? So today we're gonna talk about real estate. I've been investing in property for the past 15 years, and I can honestly say it has been one of the most rewarding things I've ever done. And in this video, I am going to share with you some of my top tips and insights to hopefully help you get started on your own real estate journey. So broadly, there are two types of investments, right? You have residential and commercial. Residential is a home or an apartment building, whereas commercial is an office block or a retail store. For this video though, I'm going to focus primarily on residential since that's where I have the most experience with. So why should you invest in property? Well, number one, it's a relatively safe investment. It's something that most people can understand. And unlike stocks, it's a tangible asset. Number two, property values tend to increase over time, although there will be short-term fluctuations. In the long run though, if you buy in a good area, it will go up. Number three, rental income. So if you buy a property with the intention of renting it out, you can use the rental income to cover your mortgage, your expenses, and then some. And number four, leverage. So unlike stocks where you can only make as much money as your initial investment, with property you can borrow money from the bank to invest in it and therefore make a lot more money than you initially put in. This is called leverage. There are three key financial metrics you need to know when it comes to property. The first is the price to rent ratio. This is basically how much you can rent a property out for versus how much it costs to buy. The lower the ratio, the better, because it means you can make money from day one. The second is the cash flow. This is the monthly rent you receive minus all your expenses like your mortgage, insurance, and maintenance. The third is the cap rate. This is the return on investment you make as a landlord. It's basically the net operating income divided by the property value. So before you even think about buying a property, you need to find the right location. Look for areas with high rental demand, low vacancy rates, and high appreciation potential. Do your research and find out what's happening in the area, new developments, new businesses moving in. All of these things will increase the value of your property. Here are 5 tips for first-time investors. Number one, don't overextend yourself financially. Only buy a property you can afford. Get pre-approved for a mortgage so you know how much you can borrow. Do and be too greedy and buy something you can't afford just because it is a good investment. Be smart and only buy what you can afford. No, 2, buy in a good location. I cannot stress this enough. If you buy in a bad area, no matter how good the deal is, you're not gonna make any money. So do your research and find a location that meets your criteria. Number 3, make sure the property is move-in ready. The last thing you want to do is buy a property that needs a lot of work. It is gonna cost you a lot of money and you're not gonna be able to rent it out while it is being worked on. So find a property that is already move-in ready, or at least not gonna cost you a fortune to fix up. No. 4, don't be afraid to walk away from a deal if it doesn't make sense. There are so many properties on the market. Don't feel like you have to buy something just because you're a first-time investor. Be patient and find the right property that meets your criteria. If it doesn't, walk away. There will be other deals. Before you buy any property, do your due diligence. Get a home inspection, get a survey, get a title search. Make sure there are no liens on the property. Do a Google search on the area. See what's happening, what's been happening, and what's going to happen in the future. Talk to the locals, see what they have to say about the area. All of this information will help you make a more informed decision when it comes to buying a property. Your exit strategy is how you plan on making money from the property. Are you going to rent it out? Are you going to sell it? Or are you going to do a combination of both? Your exit strategy should be in place from the very beginning. Knowing this will help you decide what type of property to buy, how much to pay for it, and how much rent to charge. So there you have it, guys. Those are my top tips for investing in property. I hope this video was helpful. If it was, please leave a like and subscribe for more content. And if you have any questions, feel free to comment down below. Thanks for watching.